Mastering pullbacks. The market has been choppy the last couple of weeks, so what better topic to discuss than how to master pullbacks, take advantage of them when the stock does pull back, lift back off the key moving averages, especially when you are in a uptrend like we are right now. Good morning, everybody. Welcome to today's morning coffee with Mike. Just gave you the topic of the day, and so let's jump into things. Before we jump into things, though, make sure that you are subscribed to wherever you are watching from, whether it's Instagram, YouTube, Twitter, Facebook, LinkedIn. Make sure that you like and drop comments down below. Let me know where you're from, where you're watching from, and questions that you have throughout the show. Let's dive in. This is going to be more of a webinar tutorial kind of format today. Lots of education here. So, We've got few we've got the major indexes up on the screen right now. We've got a bunch of them up here. I like to keep the S&P 500 right over here, NASDAQ, Russell 2000, New York Stock Exchange, the Dow, and this over here is the IBD 50. You can see that they're all moving from the lower left to the upper right, straight across the board, but it has been choppy the last couple of weeks here, right? It hasn't been completely smooth, especially when you take a look at the Russell 2000. You have some noise right there, right? It's chopping around back and forth. So we're in an environment that is choppy. So, common question that people have, question that I had for a very long time is, how do you know if the market is pulling back or if the market is topping out? I want to share with you this image that I came up with, and it's actually part of my book, The Trading Mind Wheel. So, the way that I like to think of the market and define the market is I like to call it the market mood, and there's three vectors that I consider when defining the market mood. The three of them are the general market, your system, and personal performance. Now, we already spoke a little bit about the general market, that being the major indexes, but I'm not just looking at the major indexes on the daily time frames. No, I'm also looking at them on the weekly time frames, and I'm also looking at them on the monthly time frames. And the reason why I want this 10,000 foot view is because time frames are like ships in the ocean. Let me explain that a little bit more, how they're like ships in the ocean. So all ships, all boats are going to be making waves as they pass through the water. A big cruise ship is going to be making much larger waves as it passes. Then let's say that you have a yacht, a little bit smaller than a cruise ship, but not like a little rowboat or a speedboat. It's going to be making its waves too. And so will the speedboat, the jet ski, well, whatever kind of aquatic vessel you happen to have. Everything's going to be making its own waves. The much bigger cruise ship will take time to maneuver, it'll take time to turn, and it's also going to be making bigger waves. When you have some conflict in those time frames, in those waves, you're going to get some rough waters. That's what you're seeing here. Switch back to the major indexes. So you have the Russell moving sideways. You have the Dow moving sideways. Same thing over here on the NYSE. The S&P and the NASDAQ are a little bit more confirmed in their uptrends already. But because these guys aren't quite there yet, that leads to some noise, right? Well, when they're finally starting to get to those breakout levels, they're not just going to break right on through to the other side. They're going to chop around a little bit. So part of the question for us becomes, well, what do we do? How should we be getting in? Is it the time to get in, or should I be turning tail and running in the opposite direction? That's where this image comes into play. Right, so we're looking at not just the general index. You want to have a strong feel for your system as well. Your system is going to include all the stocks that you're interested in trading. For me, I like to trade growth stocks. So I will screen the market for all the growth stocks that are out there that have extraordinary earnings and sales and projections, accelerating earnings, sales, and projections. I want to see a high growth rate, 25% or more. I'm looking at recent IPOs. I'm looking at all these different factors. And the ones that pass my screens go on to a special universe list. Then from there, what I'm doing is each week, I will go through that list and I will see, well, what stocks are setting up for the week. And I actually send out that whole list to our newsletter. The newsletter is free. If you go on to marrowwealth.com/newsletter, you'll be able to sign up to that and get that every weekend for free. So if you're not already on the newsletter, make sure that you're on the newsletter and you'll get my trade ideas list for the week. Heading into this week, we started out with 50 ideas on the list. Some of them were already formed and ready to go. Other ones were setting up and they needed a little bit more time. I continue to monitor them throughout the week. I would say that if you're trading and you're swing trading, you should be monitoring whatever setups you're looking at throughout the week as well. Sometimes they could morph, sometimes they could actually improve as the week goes on. When you are monitoring your lists, you want to be looking for the high quality setups, whatever you personally define as a high quality setup. And having a clear definition of what a high quality setup is critical, because sometimes you'll find 50 setups that are kind of okay. Sometimes you'll find 20 setups that are freaking amazing and you want to be plowing in. That's telling you what type of merchandise is available in the market. When you have great merchandise that's being presented, that's when you want to be scaling up. When you find a lot of trash, that's when it's time to be sitting out. And so if we're looking at that picture again, let me keep on flipping back and forth over here. If we're looking at this, and your system is telling you that there's a bunch of stocks that are ready to go and they're high quality, high reward, low risk setups. That's what you want. And also in there is your personal performance. So if you are taking the best stocks that are in the market, I'm just going to take a quick sip of water here. If you are looking for the best stocks in the market, and you're actively trading what you perceive to be the best stocks in the market, then you should be performing well. And if you're not performing well, that is feedback from the market. And you should be taking that as feedback from the market. This is one of the reasons why it's so critical for you to follow your rules, to have clearly defined rules, follow those rules religiously, and also have a process to improve your rules. Because let's say that you just signed on to this live stream and you're learning, you're figuring out the market, and you don't have great rules yet. Maybe you picked up a couple of rules from me, maybe you picked up a couple of great rules from somewhere else, but you're still learning. It's going to take you time to learn all the stuff. It doesn't mean that the rules aren't good rules, but it does take time to learn and integrate the rules. Once you have your process in place where you are following trading rules and you are executing well, then that's when you could really take your personal performance as feedback from the market of, okay, I should be scaling back, I should be scaling up. Once we have all those things in place, right? We spoke about a lot of different things already. General market condition, your system, the personal performance. That's what's going to tell you when it's time to scale up or scale down. Here's an example of a stock that I'm in right now that I was in a while back. Actually bought it back right here. In fact, why don't I turn on my annotations for you, and you can see the pullback that I bought over here. Now, Here's the part where we're going to begin talking about mastering pullbacks, right? SMCI, mastering pullbacks. So back here, price ran up significantly. But right now, why don't I turn off the annotation so it's a little bit cleaner? So price started this run. It started this run for a while, pulled back, broke out down here, pulled back again, started a massive run, pulled back right in here, broke out, and then it's already been running for a little while, and it pulls back to the 21 period exponential moving average, that purple line. I see this, and it's rounding out a bottom here. And this rounded bottom is a setup that I look for. There's a couple of ways that I define this particular setup. One of them is a high tight flag. The reason why it's a high tight flag is because from this point to that point is over 100% gain. And when a stock moves over 100% in less than 8 weeks, it's a potential high tight flag candidate. Now, this move, right? Well, where it is at right now, this needs to be contained within 5 weeks and a 20% drop to be considered a flag, right? Pretty damn specific. At this stage, when it's pulling back and I see that it's testing that purple line, that 21 period exponential moving average, my ears are already perked up because I know what the pattern looks like. And I also am observing that this is the first time that price is testing that 21 period exponential moving average. So, what do I do? Do I just jump in because it's sitting right there? No, I don't want to just jump in because it happens to test some magic line. I want to go down to an even lower time period. So, let's pull up the 30-minute chart. On the 30-minute chart, couple of key things on this 30-minute chart. You have these moving averages. These moving averages are pulled from the daily time frame. That's key. I think that that's critical. And the reason why is because I'm trading based off of the daily time frame, right? I'm trading based off of this. So I want these moving averages to show up on the intraday chart so that way I could get very surgical with how I'm going to enter this stock. Now, I'll put my annotations back on so that way you could see how and where I got in. So I entered right here, right? I didn't get in over here, and I made some notes for why I wouldn't get in back there because there were so many other danger signals at that point. So what do? You wait. And sure enough, the setup improves. It tightens up more over here. It gives this very tight setup. The distance between the entry price and the stop loss was 5%. That's fairly tight. And I want to talk about tightness for a second because what might be tight for one stock might not be tight for another stock. This stock, 5% happens to be fairly tight. How do I know that 5% is fairly tight? The reason why I know that it's fairly tight is because of this indicator that I've got down there. You see all those little green lines? Type into the chat yes if you see all those little green lines. What that is the percent daily range of the stock. So I've got that script right there, and you can see my face is blocking it on the other Facebook and YouTube, but over here on Instagram, you can see that it's 5%. And as you start to move the cursor over here, right now, the percent daily range is about 7%. So this stock is giving me a 5% risk to enter this thing down here, while the percent daily range is 7%. So relative to itself, it's very tight. Great. Back to general pullbacks, right? Because that's why we're all here mastering pullbacks. You got a little bit extra there on that last comment. So, what makes this a good pullback versus let's get the hell out of Dodge? First thing that I'm looking at is the run itself, right? We spoke about the setup. It pulled back to this moving average, the 21 period moving average. Something else that I noticed on this was the run up, right? You see how price is moving up and the volume down here is pretty massive on the run up. Then take a look at how price is declining. The volume starts to taper off a bit relative to what it's been recently. You might take a look just at this snapshot over here and say that, oh, the volume is still pretty high, but relative to what volume was, and even during this run up, that pullback is on declining volume. So you have a price decline, range decline, volume decline, all coming into a spot where price can get supported at. 21 period moving average is a spot where price typically gets supported at for some of the best, highest growth, highest momentum stocks that you'll find. Another point on this too, if you're able to see it where price actually stopped, it's pretty close to where price found support back here and back there. You can see the dotted line, right? It's not exact. It typically won't be exact, but it will generally be pretty darn close to a prior area. So you look for all those kinds of things, and those are the kinds of things that tell you that, hey, this could be a great pullback buy. So I get in over here, and you never know if it's going to actually work, right? Well, like I'm not in the predicting business; I'm in the risk management business, and I also know that prices trend. I also know that when stocks have a lot of momentum, the upside can dramatically outweigh the downside. So I'm looking at this as a tight risk with potential high reward, right? Low risk, only 5%, potential high reward. So far, I'm up about 18% on this thing, and I'm ready to take my third scale out potentially later today. That is what, in a nutshell, what you want to look for when you are looking for pullback buys. Let me know what questions you guys have. See a few hearts coming in and some thumbs up over there on Facebook. I appreciate you guys. Let me know what questions you have. Stick around for a few more minutes here and answer some questions. And yes, the setups, all these things are in the weekly newsletter. The weekly newsletter is free. You could get it on marrowwealth.com/newsletter. Someone's asking about candlesticks. No, I typically don't use candlesticks. The reason why is because bar charts give me all the information that I need. I've learned how to read a bar chart better than I've learned to read candles. Well, when I first started, I actually started when I got serious about trading. This book right here. I've spoken about this book at length before, but I'll mention it again. How to Make Money in Stocks by William J. O'Neill. He used bar charts. He looked at the high, the low, and the close. And so when I went back in time and I studied not just his book, but many others, gone through classes and seminars and workshops and courses, all these things, the books just had bar charts. So didn't need candles because these have everything that you need. And it's about finding the patterns. It's about finding the allowing the chart to tell you the story and finding ways on how to capitalize on it. I'm not against candlestick charts. I've just learned how to use these, and so because I'm comfortable with these, I stick to well what's worked, right? If it's Not broke, don't fix it. But if you do want to use candlesticks, then I don't have anything against them. Let's say, what other questions do you guys have? Questions about pullbacks, questions about multi-time frame analysis. Here's a question about how to master the one single setup. Very simple. If you want to master one setup, then you want to have a clear definition of what that setup is. Uh, you want to know the depth of the pattern. You want to know the length of the pattern, the typical time frame and market that you're going to find that pattern in. You want to find all the baseline criteria for that setup. And in fact, I go at length in talking about how to define your setups in my own book, The Trading Mind Wheel. If you haven't read this book, go pick it up. It's available on Amazon, Barnes& and Noble, everywhere books are sold. Trading Mind Wheel. So you're going to want to have a clear definition for your baseline setups. From there, you want to figure out what takes this particular setup from good to great. You don't have to define a setup from scratch. You can find setups from me, like take setups from O'Neill, take setups from whoever you follow that is proven. And these same kind of setups present themselves time and time and time again. So, like the setups themselves aren't really unique in that kind of way. Like you could find other setups, but have a clear definition of your setup and then figure out what makes one good to great. After you find out all the qualities that take one from good to great, then after that, you're going to want to have multiple models of this kind of setup. Why don't I share with you guys my own model book? This is something that I share with our members in our elite program. Premium members and VIPs get access to this. I also mention a few of them in the Trading Mind Wheel book as well. Let me show you a few of these here. All right, so this is what I'm talking about. So let's say you've got a definition of a pullback buy, right? Just like what we were talking about today. You want to define where you're getting in this thing, what time frames you're looking at. So I'm looking at daily time frames. It should be at least 7 days long. The bars around the pivot, minimum 3 days. I want to have a depth of the pattern of 7.5 to 20%, depth around the pivot of at least 3%. Then the character, right? The look, the character is, it typically pulls back to the 21 period exponential moving average or even the 50, right? That's what we had with SMCI. So it's fitting all these characteristics. Slope of no more than 45 degrees. You could get some pullbacks that are just super, super steep. You don't want those. You want the ones that are nice and controlled. Price action should be smooth. Volume typically dries up as we move further to the right on the chart. You saw all those things with SMCI. Placement in the trend, up 1 times or more the range of the original base. So pullbacks typically are the second, third, fourth time that it's pulled back. Same thing that we saw in SMCI. The market type required, right? Uptrends. And then I've got this list of things over here. Boosters, right? All the different boosters that I'm looking for. Support at the 50 or the 21, positive reversal at those levels, shakeout, plus a positive reversal, 3 to 4 days of sideways action, stochastics turned up, relative strength line, outperforming. So it would have all these baseline things. And then if it does, then I'm starting to look for some of these boosters. Then I have these models, right? So here's a model of a pullback. right? Like you could see that it had this long run up and then it pulled back, shook out below the 21 period moving average, actually shook out below the 50, then came back up, pulled back again, and then off to the races. You want to have several models that you are looking at. So that way you can compare the charts that you're looking at in real time to the model. And then that will help you figure out, do you really have a strong setup or do you not have one? And should you pass? The name of the game, the idea is to trade the best. You don't want to just trade anything that happens to be moving. You want to be trading the high probability, high reward to low risk setups, and that's it. By doing that, you will prevent yourself from over trading and you'll give yourself the best opportunities for success. Let's see, what other questions you guys have? Got a couple of more minutes here. Question from Photo So Dully. How do you know when it's done pulling back? This is why I prefer to buy the bounce after the dip, right? Like you may have heard the term buy the dip, buy the dip. Don't buy the dip. Buy the bounce after the dip. So let's go back to any of these charts here and I'll show you what I mean. Right? Here's one. So you see how this was pulling back right here? You don't know that it's done pulling back yet. So you wait. It consolidates. When it breaks out, that's how you know that it's done. Here was another one, right? This was pulling back. Could you have gotten in there? Maybe. That I think that would have been pretty aggressive to get in, but it never breaks that trend line either. It pulls back some more, right? It drops below over here. Then it rises back, pulls back, and now you're buying a breakout. So you're buying the bounce after that dip. When it breaks out, it's giving you a range. It's saying that if it breaks out here, then you could reasonably cut your loss down here because it's not doing what you expected it to do. It is continuing up, or breaking down rather. If you come over here and you buy it and it runs like this, then that's the confirmation. There is no reward without risk. The name of the game that we're trying to do is to limit our risk. We want to manage our risk. Be a risk manager. Don't be a risk taker, be a risk manager. Let's see, what other questions do you guys have? Again, these are all topics that go into our free weekly newsletter. So if you're not already on the free weekly newsletter, make sure that you are. marawealth.com/newsletter. And that question regarding mastering one setup, no regard. So whatever asset class that you're trading, there'll be one setup or a couple of setups that show up more often than the others. Start with those, right? So that way you have some strong setups to take. Actually, you could start by mastering one setup that doesn't show up that much. So that way it's mastering a particular setup and it's also mastering patience, right? Because you don't want to just start to see that, oh, yeah, I think that one is a high type flag. Well, high type flags don't show up all that often. So if you want to master one, you could master the high type flag, and then you'll be mastering patience, and you'll also be mastering the setup that can run the furthest, the farthest, and the fastest. but it does not show up all that often. Someone had a question about the 50 or the 5 EMA and the 20 EMA. I like to have both of those on my charts. I have the 5 EMA and I actually use the 21 period EMA. That was just what was taught to me many, many years ago, and it stuck. The thing with moving averages is that you want to be consistent with whatever ones you end up using. If you use a 5 period, a 6 period, whatever it is, stick to that because then when you are mastering one particular type of setup, you'll start to see the nuances of how price responds around those moving averages. So if you're mastering one particular type of setup, you'll know that, oh, when price moves in this direction and it responds this way around a certain moving average, that it should react in this way. And if it doesn't, then that's another reason to cut that trade. If you are adjusting your moving averages a lot, then you'll never gain that feel. So, most important thing, pick whatever moving averages you want. They're all fine. Just stick with those moving averages. A couple moving averages that I would always want to have on my charts and not customize is the 50 period moving average, the 50 period and the 200 period moving average. The reason why those are permanent fixtures on my charts are because those are the ones that the major institutions use. Major institutions don't move into a position and out of a position like you and I can. We could blow out a trade in a second, right? And not move the market. If they exited their entire position, they would cause a crash. If they entered their full position all in one shot, then it would rocket the stock to the moon. They need to move incrementally. The way that they typically move incrementally is by buying around those much longer term moving averages. So that's why the 50 period moving average and the 200 period moving averages are permanent fixtures on my charts. And I'm looking at daily charts when I'm looking at so 50-day moving average, simple moving average, and the 200-day simple moving average. All right, and we are out of time, so we'll wrap things up here. Want to say thank you so much for joining me today. It's been a lot of fun. We'll be back here tomorrow at 11:30 a.m. Eastern Standard Time. And one more time, if you are not already on the newsletter, make sure that you're getting the newsletter because there's so much great info on there. marawealth.com/newsletter. And I'll see you back here tomorrow. Take care. Much love. Peace out, everybody.